The following is a sponsored program paid for by First Alliance Credit Union. Welcome to Good Money Moves, featuring Jenna Taubel from First Alliance Credit Union and Andy Brownell. Here's Andy Brownell on Rochester's News Talk, 1340 KROC AM and 96.9 FM.
It's time for Good Money Moves. I'm Andy Brownell with Jenna Taubel, Director of Brand and Digital Member Experience with First Alliance Credit Union. Hi, Jenna.
Hey, Andy.
So last week on the show, we talked about how to prepare for the holidays with a holiday spending plan. What's the Good Money Moves topic this week?
Yes, so this week I have invited a special guest on the show with us, Terry Gries, a local insurance advisor here in Rochester. And I have invited him to join us today to give us a little bit more information about insurance, kind of the basics around that, the different kinds there are. I feel like this is a topic that we could probably cover over and over again and still learn something new every time. So I'm going to turn it over to Terry real quick to introduce himself and kind of talk a little bit about what his role as an insurance advisor is.
Thanks for having me, Jenna. Thanks, Andy. Appreciate the introduction there. Wonderful to be here. I'm excited to talk with both of you about some insurance topics. A lot of people are being affected by insurance right now, kind of as always, but we're seeing a lot of changes in the marketplace right now. So maybe a topic that has come up recently, and I'm excited to share some insights into that. I am an agent here in Rochester. I've been doing it for about 8 years. And so, yeah, fire away. I'd love to hear some questions that you might have or provide any insight that I can. All right.
Well, to start out with, Terry, the basics. What types of insurance coverages are out there?
Yeah, that's a great question. There's a ton of different types, but primarily what most people, on a day-to-day, your average person is going to deal with is your home insurance, your auto insurance, maybe renters if you don't own a home yet. Mobile home insurance falls under there as well. Obviously, health insurance is a big one. I personally don't deal with health insurance. It's a pretty big topic, it's become much more complicated in the last 10 or 15 years.
Oh my gosh, yeah.
And so not something that I deal with directly. You might have heard of maybe pet insurance or life insurance or accidental death and dismemberment, or there's a host, but primarily what I deal with is home, auto, renters, life insurance, and some small commercial as well.
Awesome. So this is where I want to dig into some of the terminology that I know people hear over and over again when they're dealing with insurance. And I know when I first entered adulthood, I was very confused by these terms. And I know today there are still people who are confused by these terms. And that is the difference between the deductible, a premium, a copay.
Yeah.
What does all that mean? How do you keep them straight?
Yeah. So really, basic. I'll go through each of those three because I think that's a great question. Your deductible is going to apply to most types of insurance out there, right? And so basically, the really simple answer to what a deductible is it's your out-of-pocket cost whenever you file a claim. Okay, so for instance, if you had a home insurance policy and let's say you had a hailstorm come through and there's $10,000 worth of damage, if you had a $2,500 deductible, the simple way to say it is your insurance company would cut you a check for $10,000 minus the $2,500, so you'd get a check for $7,500. This applies to health insurance. This applies to almost every type of policy out there. There is a deductible. Premium, really, that one's pretty simple. That's just what you pay for that insurance policy for the term. So whether it's a 6-month term or a year term, your premium is your cost. And then a copay, most of the time when we run into that, that's on a health insurance side. So let's say your copay is 15%. We're in open enrollment right now. I think that's something First Alliance staff just got done with. Is that right, Jenna?
Yes.
Yes.
It
Okay.
is that
So
time of the year.
It
We all
is
need
it
to
that
take
time
is.
of
our
the
pause.
year.
It is. So if you were looking at it and really went into the details, you could see your options for different plans. And on there you might have saw a copay. And it might say something like 15% until your out-of-pocket maximum is met for a specialist. So if you go to your primary and they refer you over to a specialist and your copay is 15%, then the insurance company picks up 85%. You pay 15% of whatever that bill is for that visit. Does that kind of make sense?
Sure does. It sure
Perfect.
does.
With the
So I'm guessing insurance companies use all of these different, a deductible and a copay, and they kind of use those to help manage the cost to you as the consumer of that insurance product. So
Yeah.
like if you had a higher deductible, like you're willing to take on more of that payment, you would maybe have a lower premium that you would pay every month and vice versa. Is that correct?
Well said, you're hired. Are you looking? Yeah, absolutely. So, yes, the higher deductible you carry, the less you pay for insurance. Very simply. If you are willing to assume more risk when a claim pops up, then the insurance company is going to reward you by lowering your cost.
So in other words, you're more or less self-insuring that portion of it.
Correct. Yep. Yeah. This is let's say very typically if you have auto insurance, what used to be the typical deductible might be $500. Let's say 5 years ago. As we see auto insurance rates increase, some people are moving to $1,000 deductible because that's going to lower their cost and they're willing to assume that risk. Well, it might be
Sure.
worth, the savings might be worth that extra $500 if I ever do file a claim out of pocket. So
Yeah. Because for many of us, we never file a claim if we're lucky enough.
absolutely. Yep. Absolutely. And so in the long run, and this is where it's helpful if you're working with an agent or a risk advisor to say, if you're looking at things, let's say you carry a $500 deductible now. Hey, insurance agent, what would it look like if we move that to $1,000 deductible? Okay, well, it's going to save you, let's hypothetically say $100 a year is what you're going to save. Well, if I go 5 years without a claim, I've made up that $500, and now anything past that, I'm actually saving money.
Yeah.
So for a lot of people, that's a great option. It's a way to lower cost. And like you said, Andy, a lot of people don't file claims. And so that's one way that you can offset those things.
Okay. So the big question I always have is, and this is always the conundrum trying to figure it out, how much insurance do I need and how do I figure out how much insurance I need?
Yeah. I'm going to be biased here, right? So I'm always going to recommend that you work with an agent or 99% of the time, let's say. I won't say always, but this is where working with that agent or risk advisor, whatever term we're using, I feel is going to really, really assist you in determining that, right? So maybe you're comfortable self-insuring a cell phone. Let's say we all have cell phones now. Most of us have smartphones, might be $1,000 device, right? I personally don't carry insurance on my cell phone. I've got 5 of them sitting in a drawer. If I drop mine and it breaks, then I'm just going to pick up an old one and I'll be fine. Okay. Some people that's very important to them that they spend maybe $15 or $20 a month on insurance. So it's really what your comfort level is on some things, on whether or not you're willing to self-insure them or not.
Well, I'm thinking in terms of my home that
Yeah,
it's hard to gauge what your home is worth,
absolutely.
or
And
especially the cost of rebuilding the home.
absolutely, especially now, right? Inflation rates.
Yeah.
I mean, everything seems to be kind of, going up dramatically, right, over the last few years, and a lot of fluctuations there. So, as an agent, my job is to determine that coverage for you. Let's say specifically on your home, like you said, Andy. So we have the benefit of having cost calculators, where we're able to put in the characteristics of your home, many other factors, then it's going to give us a number on what that home should be insured for, what it would cost to rebuild it tomorrow if something drastic happened tonight where it was a total loss situation, right? And we want to get as close to that as possible. We never want to be under, but we don't want to be dramatically over, because I don't want you paying for insurance that you're never going to be able to use, right? And so agents have an advantage there where we have those tools to calculate out what that's going to be.
Is it common for people to underestimate what they have in the home, the contents, their stuff?
Yeah, that was my question as well. Do people come to you maybe for like an updated quote, and you find out they're actually maybe underinsured because they haven't maybe shopped insurance for a while, and they've had a lot more stuff kind of added into their home or assets that they've acquired that they haven't properly insured?
Yeah, so great questions. Most home insurance policies, and this probably goes back to people undervaluing what we would call contents, but they're personal items in their home. Most insurance companies or most insurance policies now on a home are insuring your contents for a percentage of whatever the house is insured for. So to use really easy math, let's say you're insuring your house for, let's say, $400,000. Maybe it's a 50% of that is what your contents are insured for. So $200,000 is the coverage, and that's kind of built into the policy. Sometimes we can raise or lower that. Typically we can always raise it if needed. Lowering it, sometimes we're restricted on that. Maybe the company says, no, 50% is as low as you go. But I will say the contents add up a lot quicker than people realize.
Mm-hmm.
And we should be, or what most people want is replacement cost on those contents, meaning if you got, let's say, a 5-year-old TV hanging on your wall or on your entertainment center, and if you were to sell it on garage sale or marketplace or wherever you would sell it, it's worth $50. If you have a fire and that TV burns up, you don't want $50 for that TV. You want to be able to go out and buy the equivalent of it brand new, right? Mm-hmm. And so really the value of that might be $750, if that makes sense.
Sure it does.
Mm-hmm.
Yeah.
I'll tell you what, we need to take a break right now, so we'll do that. And when we return, we're talking insurance today on Good Money Moves with Agent Terry Gries. Jenna Taubel with First Alliance Credit Union is here as well. I'm Andy Brownell, back in a moment on News Talk 1340, KROC AM and 96.9 FM.
Good Money Moves continues in moments with Andy Brownell and Jenna Taubel from First Alliance Credit Union. This is News Talk 1340, KROC AM and 96.9 FM. We're talking Good Money Moves with Andy Brownell and Jenna Taubel from First Alliance Credit Union on Rochester's News Talk 1340, KROC AM and 96.9 FM.
Welcome back to Good Money Moves. Jenna Taubel with First Alliance Credit Union and Terry Gries, local insurance agent. We're getting brought up to date on insurance topics today on Good Money Moves. Jenna, you have a question for Terry?
I do. So we talked a lot before the break about the cost of insurance and kind of what goes into that. But the other question I have around that for you is, why are insurance costs rising so much? And it feels like recently more so than in the past couple of years. I know I've seen increases on all of my insurance products recently, and it's like, what is going on? So Terry, what is going on with insurance costs?
Yeah, so this is probably the most common question I get these days, and rightfully so, right? I'm seeing it too. Everyone is seeing these very large increases in their insurance costs, their premiums. Okay, so I'll talk a little bit. Let's talk about maybe home and auto insurance. Those are the most common for most people, and kind of what's driving those increases. On the auto insurance side of things, I would say claim frequency and severity are two big driving factors. And what that kind of means, claim frequency is just how often we have claims, okay? And then the severity is how much it costs per claim on average. Okay. And it's interesting we're in a very challenging time right now on the insurance side, because we had this little thing called a pandemic happen a few years ago. You might have heard of it. And all of a sudden these roads were empty and insurance companies are refunding premiums. Maybe you saw that. Less driving, people are at home, you're getting money back, and all of a sudden your costs are going way up. And if you were on the road when, mid 2020, not a lot of cars, but people were driving very aggressively, very fast. And what we've seen is that some of that driving behavior has continued, even though we've gone back basically to normal or about normal with the amount of vehicles on the road. And so insurance companies and this is industry wide, are seeing claims happen more often. And so they're trying to adjust for that, and they're trying to figure out what this new driving behavior is and what that looks like for them, how much they need to charge to, either break even or make a profit, right? Not be in the red. And then the severity, I've got some examples there. Let's say, I'll use an easy one. Let's say you're at a stop sign and somebody comes up behind you and hits you, maybe going a couple miles an hour, right? 15, 20 years ago, that might have been a $500 claim. Today, maybe not even 15 years ago, but today we've got sensors in our bumpers. We've got backup cameras. We've got different factors that $500 claim might be a $1,500, a $2,000 claim now. And so the more technology and the more safety features, and the safety feature seems counterintuitive. Safety features, you would think it'd be safer, insurance would be cheaper, but every time one of those gets damaged, it has to be replaced, and all that technology is adding cost to the claims. And so that's causing insurance companies obviously to charge more because you're paying out more.
Sure.
Inflation obviously is a factor, and inflation and labor shortage are going to be two factors that affect both home and auto insurance. We're seeing a very severe labor shortage for skilled technicians in body shops and people, contractors, roofers, etc. And so they have to pay those individuals more, which also increases how much the insurance companies are paying out on claims.
Is it directly related to, I guess, storm damage? Last year or the year before, there was quite a bit of hail damage in the Rochester area.
Yeah, absolutely.
And I was seeing roofs being put on everywhere.
You're not wrong. I think Rochester, at least a part of Rochester, I think has been hit. I could be wrong on this, but I want to say there's been hail claims in Rochester for the last 3 or 4 years in one part of town or another. Minnesota is actually one of the most hail-prone states in the country, believe it or not. And loss ratios, basically the percentage that insurance companies are paying out versus what they're collecting, it's one of the highest in the nation overall for homes, more so than California. Believe it or not, we hear a lot about California in the news about insurance. Minnesota, Iowa, South Dakota, these Midwestern states get a lot of hail, and it's really pushing the home insurance prices up.
Interesting.
We don't have hurricanes or earthquakes.
Well, that hail is costly.
Yeah.
Believe it. It's a surprising statistic, but it's.
I am one of those homeowners who got a new roof.
Yeah.
And I was surprised at how much it cost.
Yeah, I don't know your home, Andy, but I would say probably your average home nowadays. I think 20,000 is probably a realistic expectation, maybe even north of there. Yeah.
It's crazy.
So I guess the other side of this, as the insurance rates go up and our premiums cost us more each month or every 6 months or however you wish to pay, are there ways as a consumer I can find to, save a little money on insurance premiums?
Yeah, absolutely. There are some things that you can do. There are some things that if you're working with an agent or an advisor that they might be able to look at for you. So, I mean, the easy things are driving record and things such as speeding tickets or whatever. Every time you get a violation, that's going to drive your cost up. So let's say you've got a clean record, no accidents recently. Actually, I'll back up on that. No accidents, even claims. Back in the day, anything that wasn't your fault didn't really affect your rate, or if you went to look at a new company, it didn't affect how they looked at you, and that has changed. We're seeing that change, and so that old conception we need to kind of change a little bit. And so these small claims, even if they aren't affecting your rate, if you want to go shop another company, look at another company, talk to another advisor, if the insurance companies are seeing a pattern of small claims filed, that can affect your ability to switch. So I would just say talk to an advisor before you're filing those claims. But claims driving record are going to be a factor in what your insurance costs, so try and limit those as best you can. But there are some great discounts on there that most companies offer. One of the more popular ones nowadays with technology is an app that you put on your phone. It's going to track some parts of your driving behavior. So if you have a tendency to brake suddenly, accelerate suddenly, it'll look at time of day that you drive. We see higher risk factors associated with some people driving maybe midnight to 4 a.m. and how many miles do you put on a year. Different companies track different things, but they can provide some good discounts. Bundling your home and auto and some, if you've got a boat or a motorcycle or what have you, bundling those things with one company sometimes can help. Things like electing to pay automatically out of a checking account or on a card. Paperless billing, paying your insurance premiums every 6 months or every year. Most companies are going to offer a discount for all those things. For drivers over 55 years of age, there is a defensive driving courses that are offered here in Rochester and the surrounding areas or online, and those will give you a discount as well with any carrier in Minnesota.
Good info.
Yeah.
We do have to take another break, so we'll do that. We're talking insurance today with Terry Gries. Jenna Taubel with First Alliance Credit Union is here as well. I'm Andy Brownell. It's Good Money Moves on News Talk 1340, KROC AM and 96.9 FM.
Good Money Moves continues in moments with Andy Brownell and Jenna Taubel from First Alliance Credit Union. This is News Talk 1340, KROC AM and 96.9 FM. We're talking Good Money Moves with Andy Brownell and Jenna Taubel from First Alliance Credit Union on Rochester's News Talk 1340 KROC AM and 96.9 FM.
We are back with more Good Money Moves. Jenna Taubel is here with First Alliance Credit Union and Insurance Agent Terry Gries. Jenna, take it away.
Yeah, so you've given us a ton of good information so far, Terry, and I feel like we could talk on all these topics we've touched on in so much more detail. But I think the last piece I want to get at today is one that I know when I was first being an adult and dealing with insurance was, what do you do if you do need to file an insurance claim? When should you not?
Great question. I'm going to make this really simple. Call your agent and ask him or her. I told you I was going to be biased here, right? What many companies have done is they've made it really easy to file a claim online, which is a convenience thing, and consumers were probably asking for it. However, as I kind of mentioned before the break, insurance companies are really looking at claims, even if they aren't your fault now, and picking up those patterns of people that are more prone to file claims. So call your agent that you're working with and ask him or her, hey, this is what happened. Should we file a claim? And me personally, I'll never tell anyone not to, but I do want to have that conversation with them and say, hey, Jenna, this looks to be a 500 or let's say $1,000 claim, and you've got a $500 deductible. So the insurance company is going to pay you $500. But what is this going to do to your rate over the next 3 years or 5 years? Most companies will either put a surcharge on, or maybe you'll lose a discount for being claims free, or depending on the situation. So let's really look at, is this a smart move in the long run, or do you just want to not file a claim and eat that $500 or have it repaired yourself, or however you want to go about it? But I really recommend working with an advisor or an agent, and they're really they should be leading you or having that conversation with you, I should say, before you file any claims. A lot of people get surprised if they file it online, and then 6 months later their rate goes through the roof, and then it's too late.
I actually know of someone who filed a claim for what I thought was a relatively small piece of damage. It was a burn on a carpet. And granted, it was a whole room that had to be recarpeted, but that insurance company dropped them when the renewal came up. Yes. Yep. We do see this happen occasionally. And had they had a conversation with their agent, it might have been avoided. I've seen small floor claims turn into having to redo a floor in an entire house to make it all match. And yeah, there can be repercussions. Or throw a rug over it. Nobody else.
You're right. Exactly. So again, have that conversation with your agent, and they should be able to steer you in the right direction, or at least give you information to make the best decision you can.
All right. Terry Gries, thank you so much for all the great information. And I know that there is a lot more that has not been covered during this short program that we have. Jenna, is there places where you could tap into resources to learn more about insurance and other good money moves?
Absolutely. I always encourage our listeners to visit our website, firstalliancecu.com. On there, you can subscribe to our blog. We release new financial tips and advice every week. You can also go back and listen to past episodes of this show at firstalliancecu.com/podcast or on KROCnews.com. You can also subscribe to Good Money Moves on Apple, Google, and Spotify podcasts. And if you love our show, please leave us a review on your favorite podcasting platform. We'd love to know what you think. And of course, if you have a financial topic or questions that you would like us to cover on Good Money Moves, please send me an email at marketing@firstalliancecu.com. And of course, I strongly encourage you to reach out to our team at First Alliance Credit Union. They are here to help you start making good money moves today.
That's First Alliance Credit Union, federally insured by NCUA and an equal housing lender. Thank you, Terry Gries. Appreciate you appearing on the show with us. And Jenna, we'll talk to you again next week.
Absolutely.
Thanks so much, Andy. It's been great.
All right. This has been Good Money Moves on News Talk 1340, KROC AM and 96.9 FM.